Hello and welcome to this carrier update, of course, brought to you by the one and only PowerFleet. And I'm here with the one and only Zach Strickland. Zach, let's take us through it again. I mean, we were talking about last time the tender rejection index and how it's somehow easing at 22%. So let's go over some of that easing. Maybe this is going to be the baseline or I don't know, an inflection point. Do you think it's just going to kind of remain in this area?
Yeah, I think you're going to see something similar here that we saw back in January, February, where we saw a little bit of easing. It's not going to be a breakthrough moment by any means, at least not this month, Anthony. We talked about the tender rejection index. It's slowly sliding since really the end of March when we had Easter. They spiked up around 27, 28%. Now they've been trending downward. We had a little bit of a bump around Memorial Day. This is what I think the whole process is going to look like through the end of this COVID pandemic style recovery, whatever you want to call it. I think we're going to see these intermediary little spikes. It's going to be like a stegosaurus tail, with to make a dinosaur reference. I think we're going to see these because the market is still extremely tight. 22.65%, not a number that we would normally see like rates coming down, especially contracted rates, which is probably the reason this isn't, going higher right now.
Yeah.
If we look at outbound tender volume index in general, the demand side of things, remember that downward trend? You do not see that with the OTVI. The OTVI is flat to slightly up since the end of March. So this to me is a contract rate increase, starting to make carriers stay within their contracted acceptances a little bit more, 1, 2, 3% more. And it's nowhere near what we saw in January, February, where the demand side actually did fall off quite a bit. This is not that. So. Right. Again, that just means over the next month or so, 30 days, we got July 4th, end of quarter, end of month. It's going to keep things tight. Don't expect the bottom to fall out anytime soon.
Exactly. I mean, that's a great point because as we see that rejection index kind of start to come down, the truth is volumes are remaining elevated. And right. I love that reference of the stegosaurus. What was the stegosaurus tail?
Stegosaurus tail. That's the only one I could think of.
Following up the jagged tooth pattern reference. But we're looking at this, as you mentioned, contract rates also being a big factor, but maybe even, we're talking about earlier, more efficiency entering the market.
Yeah, and let's check out the map real quick of our weighted rejection index. This is my favorite map to look at in terms of weekly change. So this is near term. This isn't year over year. This is just like what happened this week. What do I need to expect this week in terms of tightening or loosening versus last week? What are the most significant areas of interest? And of course, anything in the red here indicates loosening. Anything in the blue, tightening. So those blue markets out west, Ontario, anytime I see Ontario on this map, I'm taking a picture because it's an important market. That just means that, all that demand coming through the West Coast, the warehouses are full. We talked to the Rogers boys last week about this. This is not it's much more difficult to source capacity to the West Coast. Carrier networks are more strained. The average length of haul out there is over 900 miles compared to the Houston market, where your average length of haul is about a 400-mile journey. So that's not, that's not going to have that dramatic impact to capacity that we've seen. And if we look at we can look at Ontario on the chart here. So OTRI Ontario and OTV Ontario in the green. So that's the demand side. We're not where we were back last year in terms of overall demand and tender rejections, but there is a slight edging higher right here. So this tells me that the market itself, this market, Ontario, the West Coast, Southern California markets in particular, they kind of set the tone for the rest of the country because all that capacity, the carriers have to drive, over 500 miles to get back to Los Angeles. It's in like a desert, a freight desert, if you will. It's like this big oasis of freight, but there's nothing else around it, a bunch of backhaul markets. So watching this market is key, especially this year, because that's going to pull all those carriers out to the West Coast. And when they're doing that, they're leaving the East Coast wide open.
Got you. So you heard it here, folks. Keep your eyes on Ontario. Zach Strickland, consultant of Sonar. Zach, thanks so much for this update. We'll be sure to check in with you maybe one more time. Over to you, Kaylee.